Hey traders, welcome back. Shane from GMT Futures and FX. I want to take you through our Renko V2 hybrid system, and I'm using a gold chart today. I'm looking particularly at the custom Renko, which allows us to break down the Renko charts and cleans up price action. Obviously, that's one of the things, the advantages of having Renko charts, and with our new strategy, which is fully automated, it allows us to get a really good picture of what's happening with the market, particularly with gold. So we're looking at a Renko custom Renko 0.5 with an offset of 0.1. That's the settings for this particular chart. So if you go to format symbol, you'll see that's listed in there. I've got 4 months of data loaded up. Now remember, this is an automated strategy, but I want to walk you through how the trade sets up, what are the criteria for taking the trade. Then I want you to have a look at exactly how you can profit from this particular strategy, because remember that as traders, we want to have as many tools in our arsenal as we can. So obviously, if we've got a strategy that takes advantage of a correction in the market or a reversal, or when the trend starts to fail, that's going to be an advantage to us, because then once the trend's established, we're looking for that next phase of the market, and we can profit from that move. Particularly if we've taken a trend trade already, we know that the next phase, we've got a tool within our arsenal to profit from the next move. So let's have a look at exactly how the reversal works. So what we're looking for is we're looking to establish that we have a trend. So on this particular Renko chart, we've identified that because we remember that support, we need to be above for a reversal short, we need to be above our 200 period moving average. The other thing we need to see is we need to see a series of higher support highs, and our support is this dashed green line here. That's our GMTV2 Renko support resistance. So this is a support line, and we need to see a series of higher highs, and you can see clearly that those arrows are pointing to a series of higher highs. Now the next thing we need to see is we need to see a couple of things come together for our reversal to take place. We need to see the market making higher highs, which it does, but we need to see our MACD making a lower high. So this is a perfect little setup for us here, because our MACD is making a lower high. You can see there our MACD makes a lower high and our price is making higher highs. So that's the catalyst for us to say, right, well, we're ready for a reversal. What we also need to see is this resistance band set up. You can see it sets up here, and we need our first turn bar to trigger. So once that turn bar triggers that red brick, then we're basically set to take the trade. So the anatomy of the trade, or basically the setup of the trade, is nice and simple, because once we have that close of that brick, then we're looking at our stop is the high of that actual that brick there. So we'll have a look at that. So our entry or our stop would be 1257.60, which is one tick higher than that 1257.60. We want to put it one tick higher than the high of that turn bar, and our entry is 1256.60. So we're getting in on the close of that brick. Now that gives us a risk of $110. So what we're looking for here is we're looking for at least a 2-to-1 or better for the reversals, because there's opportunity for us to re-enter a trade when we get into a reversal. I like to have a 2-to-1 reward to risk on the reversals. So even if I'm in on the trend, I'm still looking to take profit on this trade. So ideally 2-to-1. I typically don't go 3-to-1. I generally go 2-to-1 on the reversal. So if I'm looking for $110 worth of risk, I'm looking for 220 profit. So you can see there that we're in the trade at 1256.60. So there's $250 worth of profit in that move. Now, do we get all 250? No, we don't, because remember, we're only looking for $210 worth of profit. So our trade, our limit order is going to be set at a profit of 220, and we're going to exit on that trade. So we're never going to get the 250 because we've got a fixed target, remember. Now, if you are running a trailing stop, then obviously you'd still be in the trade, but we're hitting this target at 220's worth of profit. Now, remember that the reason why we're doing a 2-to-1 is because we want to make sure that we cover our cost to trade. So I've added $20 worth of slippage in on this trade. We're not usually going to get $20 on a reversal trade. That typically doesn't happen. It's more the breakout, the trend. But look, I'm being ultra conservative here because I want to make sure that people have a realistic expectation about what's happening with the market. So when you're assessing a strategy or you're looking at a system to use, you need to have slippage and commission built into those, because if you've got an overall average trade net profit of, say, less than $50 to $100, you're not really, well, less than $50, you're going to struggle to make money in the market. So even if this reversal strategy has, say, a 50-50 win rate, then we're still going to come out on top. Let's have a look at what happens when we run a 50-50 win rate. So if we're sitting at a 50-50 win rate, we know that every winning trade we take gives us $195. Every losing trade, because they're approximately the same brick size, we're risking 110. We've got to allow slippage and commission in there. So we're looking at negative 135. So our average trade profit and loss for every winner and loser, we break out at $60 profit. So that's good. It means that we have a positive expectancy on our trade sample. So we just need to make sure that win rate stays at 50-50. Now, obviously, when you're doing your strategy and your testing, you're going to determine what your win rate's going to be based on your filters. So you need to make sure that obviously that win rate stays 50 or above to keep our $60 profit. So once you've established that, you can determine exactly how much profit you're going to make on every average trade that you take. So it's really critical that you've developed and established that. Now, in some of the videos I'm going to release later on, we're going to talk about pyramiding into trades, how to maximize the potential of taking more money out of the market, and how to trail these stops to get bigger trade sample sizes. So our goal at the end of the day is always to make sure that we end up as traders with a larger average trade net profit. So that's really the goal for us as traders. So thank you for your time. If you enjoyed the video, please hit like on our YouTube channel. And if you would like more information about the GMTV2 Renko hybrid, feel free to visit us at gmtfutures.com or shoot me an email at shane@gmtfutures.com. Look forward to catching you on the next update. Have a fantastic day. Cheers.